I think that the volatility in the market right now is because Bitcoin is still conjoined with the rest of the crypto industry. Like, as far as I can see, the people driving the market in the near term from day to day are large pools of hedge fund capital and investor capital, highly leveraged, fast money that's cross trading Bitcoin versus every other altcoin offshore and in DeFi with huge leverage. And their time horizons are 1 minute to 1 week. In fact, I'm certain that volatility from all these other cryptos does ripple into Bitcoin. You can watch it, right? It's like someone hammers this thing 37% and the ripple is felt over here because Bitcoin is cross-collateralized or pledged as collateral to ETH, which is pledged as collateral to Yo-Yo coin or something. And these things are all highly levered and traded all the time.
In his latest interview, MicroStrategy CEO Michael Saylor explains why we have been seeing such volatile swings in the Bitcoin price along with very muted growth in Q4. Saylor points towards Bitcoin's correlation with other crypto assets as well as highly leveraged markets as having a negative impact on the Bitcoin price. Further, Saylor issues a warning to crypto investors that are looking at altcoins for superior returns. Make sure to stick around to the end of the video where I will cover Saylor's latest Bitcoin purchase. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and can always change your mind.
If you look at minute by minute trading patterns of Bitcoin versus ETH, they're trading in lockstep almost every 60 seconds. Like you'll see a dump in the market in ETH and it'll be reflected in Bitcoin in 30 seconds. And so that's interesting. And I've seen that correlation going on for a while, irregardless of news. And of course, I think that a lot of people have a lot of money and they have a lot of leverage, right? You can trade with 20x leverage. You can trade in theory if you cross collateralize through a DeFi exchange, you could trade with even more than 20x leverage. So there's a lot of fast money with a lot of leverage trading across the CeFi crypto exchanges and the DeFi exchanges. And they've got, Cardano and Dogecoin cross collateralized to ETH. And it seems pretty clear to me. Someone's got a big block of Bitcoin tied up in ETH, in the ETH network. And when ETH trades down, Bitcoin's trading down almost like they're a fused currency pair or fused asset pair. And they couldn't unconnect that. They can't disintegrate that in the near term. Over the long term, like months, quarters, years, yeah. But in minutes, hours, and days, it seems like there's a lot of integration there. So, what do I think in general? It's like, obviously I'm bullish on the asset class. It seems to me that we've got remarkable consensus that Bitcoin is digital property. We got remarkable consensus that Bitcoin is the one universally accepted commodity. We've also got a consensus growing that everything else is a security, by the way, safe, which is, if you roll the clock back 12 months, I think it wasn't clear, but I think right now, out of 6,500 cryptos, I think that you might have a debate over 12 of them being property, and it looks like everything else is a security. And if you're not a proof of work coin, if you're a proof of work coin that's a fork of Bitcoin or something like that, maybe there's a debate about whether it can be property. Half of them aren't, half of them are. But everything that's got an ICO, everything on proof of stake, everything related to DeFi, all of the functional coins, all the staking tokens, it's pretty clear the view of the regulators is if there's staking involved, it's a security. If there's DeFi involved, it's probably a security. right? If there's a central organization, if there's a venture capitalist involved, it's a security. If there's a central development head, it's a security, right? Any of those things are securities. And I think a lot of people don't want to embrace that reality, but that is kind of the reality. And so we're in this very interesting tension where what should theoretically happen is most of the altcoins should disappear, or they should, probably they should disappear. A few should become publicly listed, privately listed security tokens with disclosures and different rails. A lot of the entrepreneurs should exit, right? They get squeezed out of the market. A few entrepreneurs can come public. So, what's my big point here? It's like nobody can predict how the future will evolve, except to make this one observation. People are generally rational and they take the path of least resistance. And so at some point, it's possible that someone's going to buy the Bitcoin, not because they agree that with your most extreme vision of no governments and no companies and living together peacefully in one world currency. Maybe that's not why they're going to do it. Maybe they just want the money. I think the general principle, if you step back, is in an inflationary environment, right? If the inflation rate's 15%, the monetary inflation rate is 15%, and it's at least 15% right now. If the inflation rate is 15% and the cost of capital is 5%, and you have a use of proceeds, if you've got a property that you believe will appreciate faster than 15%, let's say 30%, right? Then all day long, what you would do is you would take on debt and pay the 5%. You would invest the capital into the property yielding 30%. You would scrape the 25% arbitrage. And the only thing you would spend your time focused on is, how do I negotiate the terms of the loan so I don't get forced liquidated by a capricious lender?
So there is Michael Saylor on the price volatility of Bitcoin, along with his warning to altcoin holders. I don't necessarily agree with Saylor on his altcoin view, but he does raise some good points. Do you think Saylor has it right? Let me know in the comments. Now, in case you ever were second guessing Saylor's conviction for Bitcoin, on the final day of 2021, Saylor announced via Twitter that MicroStrategy has purchased an additional $94.2 million worth of Bitcoin, which equates to 1,914 total Bitcoin. This brings MicroStrategy's total Bitcoin stack to over 124,000 Bitcoin and their total investment to $3.75 billion. Anyway guys, hope that provided you with some value. I'll see you all in the next video, and as always, have a great day wherever you are in the world. All the best for the new year.